Darin's hiding.
Casper.
Hello.
I have to come out.
You have to come out. It's
I'm out of the closet, Darin.
All right.
Come
So
on.
I'm kind of in disguise. Something made me allergic, and it has traveled throughout my entire body. And as this week, it started hitting my face, and that's why I'm wearing a hat. And as I've noticed, because of the lights off of my monitor, I can't hide it. So it's all right in here. All you see here is that crap. So
If his teeth start glowing and he gets really big wrinkles in his forehead, don't.
I mean, funny, but his chest looks like my shirt.
Well, underneath my shirt, yes, it looks like
I can't even say it. I can't get it out.
And it's all red. Not all yellow, it's red. All right, let's go. Let's get this going. Crazy things happening. What?
Nothing.
I didn't hear that. I have to listen back afterwards. So anyway, I'm Darin with Arbitrage Trade, and I have a severe body allergic problem right now. And this is after. How about that for starting off? I guess I know. My guests are. I can share with friends.
You can. Speaking of, payday is the 15th. You can overshare as much as you like.
Oh, okay. There we go. So you can cut that one. I'll take that check back. I won't deposit that. All right, let's keep going. Daniel, you are in the top right-hand corner, and that's Daniel Hopwood. Used to work for one of the wealth managers. And then we got Josh Morgan, who is JP.
Named after one of them.
Initials. That's why we call him the bank. Yep, that's right. Very accurate, yes. And except for the P, right? So, and then we've got our Quanticus Maximus. He's been very busy, very, very busy over the last month, but yet he was still able to make it this time for After the Bell. We appreciate you joining us and looking all studious like today.
Hey, I do what I can. The reason I'm here, believe it or not, the reason I'm here is not because of you guys.
Thanks.
My son had a football game last night, and he's like, "You're gonna miss the game, Dad?" I'm like, "All right, we're playing tickets. We're going. We're going." So made it to the game. They won.
You've been out of town, yeah.
32-7. Go Saints.
They won.
Oh yeah, 32-7.
Good.
Oh yeah.
I just made the connection that your favorite team is the Saints in football, and so that's their moniker too. So nice, very good.
Yep. So
all right,
always go Saints.
You can wear your New Orleans stuff to the games. All right, so here we go. We got. I got to give this disclosure in between the remarks. I have to give this disclosure. We are not financial advisors, and this is not financial advice. This information provided is surely for educational and entertainment purposes only. Please always consult an investment professional before making any financial decisions. See, I can still read decently, even though I'm on Benadryl and my body's swollen. All right, let's get out of here.
Swole and woke. This is not good.
I'm not woke. We can talk about that. I am awake.
What was that Bruno Mars song? Never mind.
All right, let's actually talk about the markets. Let's get this going. I guess healthcare you could associate with the market somehow. But anyway, let's get going here. Daniel, actually, you know what? I mean, you did give some facts and figures on your agenda, and you are dayside like the rest of us. You're not a vampire.
Actually in the States for a change.
They are somewhat accurate this time around.
They are somewhat. I'm going to go ahead and run it down though. Dow Jones was down basically half a percent. S&P was plus 0.3 and NASDAQ was flat. So surprise, surprise, put those all together and it's kind of a flat day. Mainly held up by some certain companies is the only reason S&P or S&P.
That's not the only reason. That's the main reason.
Yeah. Anyway, we'll talk about that. WTI crude is at 63.73. I just think gas is no longer it's like a who cares. VIX is in the mid 15s and dollar is at 97.8 and gold after hitting its 3,700 is a little back to 60 or 36.80 right now. And I go ahead and give us some other stuff to open this up there, Daniel.
Yeah. So, I think I've probably the last 2 weeks, I've talked about this in our Substack newsletter, that while the market has kind of continued to make new all-time highs, it's really just bumping its head along that like 6,500 level on the S&P. And even today, if you look at it, it finally kind of broke out of the range it was in for a bit. And towards the end of the day, it started to kind of sell off, kind of a little, what I like to call a prairie dog out of the range. And we've seen a bit of, yeah, like a prairie dog. It pops out of its hole a little bit and it goes back down.
And that was a visual I was seeing. That was a visual, exactly.
Get your mind out of the gutter. All right.
I don't know what you're talking about.
And then,
no.
I have a good right arm. I can do this again now. Prairie dog.
What?
I can't get back up. I'm following it. I can't get back up.
Holy.
Right, Josh. I mean, you were right there. I'm like,
I was right there too. I was like, what? All right.
Wash my eyeballs out.
Sorry. No more visuals. Okay.
Yes,
My apologies.
No more.
I didn't realize the can of worms I was going to open. I did it again. All right. So the other, kind of interesting things to note is Bitcoin, after having its dip, has for the last 3 weeks kind of gone down and sideways, but recently the last few days kind of surged back. It was at 115,000 the last time I checked, and the 10-year yield dropped 20 basis points to 4,000, or not 4,000, just about 4% in anticipation of rate cuts, which is something we'll get to. And it kind of, for all the chugging along the market has been doing, other than in gold, we've really kind of seen a continual pause. And, I think Royce will probably have comments on which way the probability is skewed to go.
Maybe. But not right
All
now.
right. Exactly. All right.
You gotta wait till next week.
Yeah, absolutely.
Just you wait. All right, we've got unemployment. Let's talk about this thing, and let's just go ahead and talk about the BLS, which is the Bureau of Labor Statistics, which I think they should just go ahead and take the L out. It should just be the Bureau. Well, let's just say BS. So the puppet ministry of whoever's in charge, BLS, put this number out. BLS, put this number out. Anyway. Employment, it keeps being a bad thing, is employment, and we hit 4.3, which I think we've been way higher than that. It's just not reflecting in the reports, and for a long time. And just like the recession, I think we've been in one. It's not being said it's one. And it's a big recession for those 80%, but maybe the 20% are enjoying the time of their lives. I won't sing that and won't animate that.
Thank you. No earworms, please.
But Daniel, besides those numbers, get us started on the facts and figures, other than just the fact that I think it's the BS department. Go ahead.
Yeah, so, the report came in about 50,000 jobs shy of what expectations were, which is a pretty big miss. And when you look at the revisions that have gone on throughout the year, it's down by about 1 million jobs than where we thought we were when a lot of the numbers were reported. And, that's a very big number to be revised over the last year, especially with June and July having, exceptionally large revisions themselves. And for what it's worth, if you want to do technical analysis on looking at the unemployment rate, which I included in the Substack this week as well, anytime we've, broken down under the 50-day moving average, stayed under it for a while, and then moved up, we always historically continue to spike through that unemployment level. Right, except for an exception in the I think it was 1963 when we had some chop. But so if you look at any time we've broken through that 50 period moving average, we always break well above it. And so this kind of starts the question of, is this the start of the new trend of unemployment spiking, which, as we know, historically, unemployment spikes, you cut rates a lot, which we'll get to next. And, as these numbers come in, are they going to continue lower, and are more revisions going to come? And is that going to affect, is this the canary in the coal mine of the clear signal of things are not looking good versus some of the other mixed data that we've gotten?
It almost feels like someone's been looking at the Fred reports. I don't know where you got yours from, but these Fred reports have been saying this for a long time. And anytime you get past that, that's what's funny. It's off of what is admitted as the unemployment. But once it hits past historically the 4.3, it starts moving up. It could hit 6 or 9 just like that. So it'll be interesting to see where it goes from here. I agree with that for sure. Any other comments from the others? Yeah, that was a 991,000 revision. That is ridiculous. All time high. It beat last year's huge revision. It's ridiculous.
Well, it beat the all-time revision, and the only other time that it's happened was
that's what I'm talking about.
Yeah, it was back in, and I mean, there's no parallels here, but it was in 2009 when everything was so skewed and like the numbers were so far off. It was literally the math that they were doing was incorrect because there were new factors that they had not included. And that was, again, back in 2009 when the economy was in a whole world of turmoil. And so, I mean, it just kind of makes me wonder, like what are we missing?
Yeah. Some of the things
being said.
Yeah, some of the things that I think that a lot of people are missing just from an economics point of view. The U.S. dollar has historically increased in its inflation rate at about 2.45% since like the late 1900s, early 1900s to where we are now. So, I mean, we've always based everything on an inflationary dollar. Now you have deflationary currencies, cryptocurrencies, and basically what it's doing is shifting how we're looking at money. And that shift, I think, is going to have a big impact on what we look at America as. They've even talked about introducing something called a universal living wage with unemployment, because we're still looking at the dollar and looking at the dollar to be the reserve currency, looking at the dollar to be everything it is. But if we're shifting from an inflationary currency to a deflationary currency, maybe we're still measuring the wrong thing. We're still looking at the old system when a new system is being rolled out.
The living wage has been tested a couple of times a few years ago in a couple of cities. It did not go well, but it will be interesting to see when it's done on a mass level. But yeah, the ULW, if you guys want to research that, what the cities that did it. But yeah, to me, there is a push, just like in New York. We may get this guy as a mayor, and then they're going to have a huge city to test socialism and ULW on, and maybe that's all part of the plan, as we've talked about from these 7 people that own the world right now. And we'll see. I have to have I don't have my hat on today, but it is on.
All right, I'll be right back, guys.
Yeah. Oh, okay. Gotcha.
Okay.
All right. So yeah, we talked about a little bit before, but you guys can have your discussion about the 25 versus 50 rate cut because of these employment numbers.
Well, I mean, I think going back to, I feel like I'm a broken record that I've been saying this all year long, is that the theme this entire year has been uncertainty. And everybody, it feels, there's a lot of times, and we've had a pretty good run. We had 4 years of up and to the right where you had less guessing and it was more just, okay, let's ride it out. Everything's great. I don't have to really, pick and choose what numbers I'm actually looking at, because, you could throw a dart at a ticker and you're probably going to hit. And, but it's just now we kind of have gone back because some of the numbers that have been introduced, specifically the PPI from the other day, did not make sense. And then you get what I was saying earlier about how the jobs numbers that was such an astronomical revision that the only parallel there is is when the numbers were actually being counted incorrectly because they weren't using the right metrics. And so now we feel that we are using the right metrics, even though we fired the previous BLS chair, Trump hired his guy, and the numbers still sucked. And so you just kind of wonder, what guidance is Powell going to do? And he's always been he's been waiting and see, and you can give him as much crap for that as you want, but I do kind of think we're going to see a lot of similarities to like 95, maybe, when we don't get that 50 basis cut that everybody's kind of hinging on right now. That I think the market's already factored in the 25 basis. I think it's kind of based on the muted reactions to the previous numbers. I think it's kind of factored in a half point cut. And so I do think there might be an oversized reaction if we get, if Powell comes in, says I'm cutting a quarter, and then goes back to his wait and see thing. And and then just goes back to like almost similar to like 95, when you would cut a little bit and then let's wait and see. And then you'd caution about, the effects of inflation, and you just use that as a talking point. But I don't know. And I, again, I say I don't know because we're back to the whole, a bunch of uncertainty kind of situation.
Well, it's the numbers that conflict, like you were saying, and I've been saying that for a while, and so have you. So explain though, for those that don't know about the PPI, why that is important, besides the fact that that's what the Fed supposedly looks at.
I mean, it's not just
what it is.
PPI, CPI, jobs numbers. I mean, the more interesting part is that you actually like added jobs were actually a little bit higher. Like you're getting, less people hiring, but there are still a little bit more jobs added. So it kind of it kind of adds to the whole chaotic, where are we going? Like, are these numbers real or not?
Right.
And so again, everybody kind of questions everything. And that's, Powell needs those specific metrics as guidance, and I don't know that he has that. So I think we're going to still continue to see that kind of cautionary approach.
I know that, Daniel, you pointed it out, but the younger folks are staying home, and less people are getting married, and it's just interesting what's being reported. So these 16 to 24-year-olds, you said there was a drop of 10%.
So their unemployment level, if you look at 16 to 24-year-olds, like as their own category, is now at 10%, which even for them is on a historical high level. And there was some other, I don't remember exactly in the article, but it pointed out that there were some other specific groups that had very high levels of unemployment as well. And especially when it came to like federal workers, which is a bit more of like an obvious one, right? So chicken might be coming home to roost with that a little bit as well. But, I think with the 16 to 24-year-olds specifically, I think it is a bit interesting of the question, is that like an AI effect? Because, I can attest to my old analyst at Goldman, who I think he's 24 now, 25. He's been looking for a new job, and he's like, I can't find anything. He's like the moment everything's what? Oh no, they know. They know. It's not a surprise. I'll tell you guys why. I'll tell you guys why after. But so he like, he, for what it's worth, like works at Goldman and like does really well, but like just simply like he either starts interviewing and like things just kind of get like, we're like, this is on pause now, or like, oh, this job isn't available anymore. And he's like, at this point, I'm just happy to have a job, because he's like, every time I try, it's just nothing.
Yeah. That is the deal right now, is jobs not being found for people. And so they're doing what they're called job hugging or clinging or something now's out there.
What happened to quiet quitting?
Around now. Right now is a bad time to rage quit. You will suffer.
Yeah, exactly. I'm clinging on, Royce. Holding onto your arms.
We're going to be doing The Apprentice this October.
Oh boy. You're
Fired.
All right,
Still
so
have some fun on the way out.
hey, if it's a big parachute, hey, I'll go. I'll jump.
So,
Dan, go ahead.
oh no, sorry. Just basically, I had to walk out, came back in, basically, but to complete that thought I was having before I left, right? Because of that, that's one of the reasons why I think Powell will actually lower the interest rate by 50 bips instead of 0.25. You have to slow down the economy if you're going to convert. So you have to stop the money from moving if you're going to try to switch it. And you're going to just same thing with unemployment. Unemployment has to basically, those numbers have to rise dramatically before you switch it out and deploy the new system. So that universal living wage or whatever they want to call it, or having to know it, you're going to see unemployment they have to get to extreme numbers before they can deploy that as a solution.
Yeah, that's what we suggested while you're gone, is that hitting that, or maybe that was while you're still here, hitting the 6 to 9% percentile. And the reaction to the rate cuts, that was the next section. We kind of talked about it, but the one thing I noticed is you got banks that are out there giving two stories too. You have some banks that are saying this is about to be a sell the news, I think is what the term you used, Daniel. And then you have others that say, no, this is a new fresh bull run that we're going to go for a while. So
that's the paradigm I'm going with. Bull run.
Conflicting, yeah.
Up and to the right.
Everything else in the last 8 years is conflicting.
It's just faster than everything that's been going on.
This is where you talk about it, Royce. If you're going to talk about it, is what your general feelings are towards up or down.
I honestly think this is the beginning of a brand new industrial revolution being led 100% by AI. So there are two ways to stimulate the economy. One is go to war. Two, turn on the industrial machine where you're building like crazy everywhere. And so we've heard about, at least in the last 3 to 4 weeks, 6 or 7 giant hyperscale data centers being built. Well, that means a ton of construction being done. That means a ton of people being that would either, there may not be the job that they choose to do, but it's a job that is available, right? And it depends on how desperate you are, or if that's what you enjoy doing, or maybe they even trade schools to teach people how to do it. Google themselves even said, hey, we got all these people out here and all this electricity, and we don't have enough electricians. We need more electricians. So they literally spent over $10 million training new electricians just to be able to maintain some of the stuff that they're deploying out here. So there are jobs definitely in the tech field. There's definitely jobs in the blue collar and even in the white collar, because the people in the white collar, they're having to learn AI to be able to keep up with what is being replaced and what's being implemented as new. So, I mean, there are jobs coming, but they're almost all of them are AI centric. So it's either adopt or be left behind.
Yeah, and like you said, you got all classes, because these things have to be built. I did, and I'm glad you brought this up, because I did put out there on our specific Mattermost earlier. I did a little D&D, not D&D, but just DD.
Roll perception.
Roll
Whose turn is to roll? It was about the infrastructure. Might say anything under the influence. It was about the infrastructure investment, because I was curious how much money is still left out there. So our Congress is what's funding this with the infrastructure, and a lot of it was put aside, which makes you think that all of this was a plan. I mean, going back to the last administration, of course, when the Congress passed the Infrastructure Act, Infrastructure Investment and Jobs Act officially, and they had a budget of $431.8 billion, with 169.4 billion has already been spent. That means there's 262 billion left. And even some of these things it's a process. All the things that have to be pulled and approved, et cetera, like the land bought, everything else, all that has to be done, and there's plenty of money out there to do it with. So, like I said, the quick research was that, in fact, I'll just sum it up. A significant portion of the funding has been awarded, but not yet spent in the real world. So that means that there's this, which I think is what is pushing the market up.
Absolutely. That's absolutely what's
but
sparking
it's not
all
out
of it.
there. Yeah, because you don't hear that said much if you listen to business news. They don't put it out there that, hey, we still have 262 billion left to spend.
And think about all of those companies that are behind all of this infrastructure bill.
Exactly. Good stuff, man. Well, let's go. Speaking of that, Oracle went crazy today, 40% up, and
That's beautiful.
That made, well, it came back down, but still, I mean, it peaked.
Hey,
And then
go Sun Microsystems. Oh wait,
yeah.
never mind.
That's kind of where we are. Except maybe this time it'll be different because that's what they always say. Elon, the trillionaire. So he's no longer the richest man in the world thanks to today, because Larry Ellison at Oracle, and it's all, most of his benefits are just from stocks. But I mean, same with
Yep,
Elon, right?
And it went up 40%. So
there
he's
you
a
go.
happy man. And do you think the reason he recessed was because he was taking profit on some of that? Let's go check out those SEC logs, shall we?
We'll get them in 90 days. How long is it?
Yeah. It's like, hey, hit that high, let's sell it all. I mean, no.
Unless he went through private and it doesn't have to be reported. I don't know.
And not Ellison, though. I mean, a lot of other people, yeah, but he's notorious for holding. Like he's not sold. He hasn't done much. I mean, now I think his CEO, or I mean his CIO or CFO or something, like I forget what her name is, but she's like the wealthiest self-made female, and she's notorious for selling, but he's notorious for holding.
I'm just gonna say a statistic that you guys are probably gonna hate, but you know, women usually do way, and I do mean like 80 to 90% better than men in the stock market. Because
they're not managing all the hedge funds then,
and they don't go against the trend.
But we'll see Lillian tomorrow. Is that what you're saying? She's on next week.
No comment.
All right, back on this Elon thing, and it's funny how really that transitions to what this section's about. And so it's basically Daniel's going to give us the reasons that he's going to flip back to being the richest man because of judgments and stuff. So go ahead, Daniel.
Well, he could be flipped back to the richest man because I believe that they're still appealing that other pay package that he was supposed to get that got denied by that court in Delaware. But I believe Tesla switched their incorporation to Texas. So, we'll find out in like 10 years if he is able to get this pay package. But this one is pretty crazy. So over the course of 10 years, based on some metrics I'll share in a moment, they want to award Elon 12% of Tesla. And it would make him, I believe this is calculated at current price levels, the first trillionaire, which is insane. At least that we know about. The Saudis probably are like trillionaires, but at least from the public markets.
Yeah.
And so this would bring his ownership of Tesla up to 29%, which he's been advocating for him to have kind of like the voting control of Tesla for a while. But the metrics that he needs to hit are pretty insane. So let me read them to you. So he needs to grow the value of the company to $8.5 trillion, which is roughly 8 times the current market cap. He needs to grow adjusted EBITDA beyond 400 billion, which is 24 times what it was reported at last year. And he needs to deliver, a bunch more vehicles. What
time last year? Because last year they were having a slump. In the first 3 quarters, it was bad. So if you're using that as your statistic, they've gone up 60, 70, 80% since last year.
It just says last year. I don't know what their adjusted EBITDA is relative to last year. I can't say I ever look at any company's EBITDA. If they want to incentivize him, you give him a low bar to start. It's not horrible for him anyway. But then he just, needs to deliver more cars because car sales have been slumping, boost self-driving subscriptions, And then there's also some robotaxi and robot sales components in there as well. And it's one of those things where it all sounds pretty ridiculous, but if there's any CEO that I can think of to do it, it would be Elon. But he would have to stop the whole political meandering thing to,
Watch,
have
he's going to
cars stop
cover the
blowing
entire
up.
moon with data centers, and no one can get up there to compete with him. Watch.
All right, so here's the issue. Here's the issue with that is that the moon is really an alien satellite, okay? And it's hollow on the inside, and there's an alien civilization on the other side. So I don't think they're going to let him do that.
And this is why we got canceled.
I've heard.
Just start yelling SpongeBob SquarePants. Let's go.
Yeah. The funny thing is, always heard about people. I've heard, conspiracy theories, or not conspiracy theories, but people coming out with crazy ideas of like putting like reactors and things on the moon, and then people will come back with, well, what about the cooling? And then you realize that it's
space.
Yes, it's sub-zero temperatures.
It's cold as shit.
It would be actually the most efficient place to put a lot of these data centers and a lot of these, like small form reactors, because it just naturally cools itself. You'd actually have to worry more about the heating than you would the cooling.
Yep.
Well, see, Josh, your statement also implies the fact that we actually went to the moon in the past.
Oh, right.
Oh, don't start that. Daniel's a conspiracy guy today.
But we all know birds aren't real, so.
Of course not. You ever seen a baby pigeon?
They're government drones.
All right.
Funded by Ted Cruz.
Mm-hmm.
And Bill Gates. All right, let's go. Here we go.
No, Bill Gates doesn't have to do with the birds.
Which now is friendly to
Zuckerberg.
Did you see the round table of Trump's round table when he had all those people together? Zuckerberg was like kissing butt, and Gates was just being weird. And it was really weird thing to watch, awkward to watch to me. But anyway, I think that's because it's a precursor to what was about to happen throughout the country and get everybody.
I'm just saying, black choker. I don't know. It was awkward for anyone else.
Now we're just rehashing things from the past, and we really should just move on to the future.
Okay, I'm moving. I'm sorry.
All right. Speaking of, I'll put you on the spot here. We've got After the Bell crayons and charts. And Royce, have you brought us a stock to look at?
Yeah, why not? Let's look at Dollar Tree. Dun dun dun. Dollar Tree. Dollar Tree has not been having too much fun. You guys see my screen?
Yep.
All right. So let's go take a look at Dollar Tree and what I'm seeing with Dollar Tree. Dollar Tree earlier in July went into a long-term uptrend on our daily time frame, indicated by that nice little green triangle that we're seeing there. And long-term, life has been really good on the Z Pro until roughly that black crossed over that pink and created very bad stuff. And I mean, probability was turning south. In short term, there was going to be a sell-off. Don't you love how these indicators show us basically, hey, we're getting heavy, and then you drop from the face of the earth? Well, the thing is, I do think that in the long term, this is what's going to happen. This is the up, test the midline, come back to the pink line, and I do think overall long term, Dollar Tree will be going up, not down. And how far up, you ask? Well, it's about $98 per share right now. Long term projections means in the next, 18 months or so, we could see highs as high as $219 per share. So I'm not exactly sure what Dollar Tree has hidden in its pockets, but it's a good secret to have. Overall,
a recession.
No, it's not a recession. Think about this. If the Dollar Tree is about to skyrocket, well, that could take that back. Let me think about that, Daniel. Yes, a recession would make people buy more Temu-ish like goods, and Dollar Tree has plenty of those, right? So with that being said, I do think that overall, this is a good one to have in your portfolio. It's not too high, it's not too low. It's about $98 per share. And if you're going to get to $219 and in less than 18 months, who wouldn't want a 100% return in less than 18 months? I'm going to drill down and basically say, is this really over, or are we just playing with fire? Looking at our 4-hour time frame, it's a completely opposite story. Notice we came down and we're testing that pink line. If you've played with the arbitrage band trading system at all before, you'll notice that anytime it gets to the top, it usually falls through unless you run out of probability right as you get there, and that's exactly what's going on. The short-term trend is picking itself back up. It's like, hey, slow down. We're not exactly there yet. And there's a good chance if we can get over 106.73, roughly, maybe it's 106.62 is the exact number. There's a good chance we can go into a short-term, maybe even Christmas run that could put us about 134 before we get to the end of the year. Right? That's all I got for this session. Thank you guys, and yeah, let me know if you're gonna get some.
All right, that was After the Bell with Royce Wells. Hey, I just do that. I like that rhyme there. We're back here. So it's time to move on to the speaking of just repeating, Josh won again. And I've got to add something here.
We're playing tennis. Josh, and me, and Josh, and me.
So here's the deal, though.
guys, we're playing doubles. Come on. Like, let's hit it to the back of the court a little bit, you know? This isn't paddle tennis, just like up front.
This is professional tennis. We're not giving you a layup.
Oh, yeah, wow. He's Agassi.
Wow.
Yeah. What is it, a lob shot? Yeah.
Yeah.
Okay. We got you. What's happened with LB though? It's kind of what was kind of annoying is okay. July 24th, it was down in the area of where I needed to be. If then it went all the way up.
He's still lamenting, guys. He's still lamenting.
No. I'm actually that's where I was near the top. Let's see, wasn't I? I think I was near the top.
No, I was top. You were at absolute bottom because you are always
yeah. So no, there was a reason.
Aaron is definitely the bottom.
So, but if you look at the pattern here, it was down there in the 50s.
Never in your range. You do realize that.
Yes, hold on. It's down in the 50s, right? And then August 7th, it was back down in the 50s. And then it pulled back up here to the 56, 58, whatever. And then it did drop back down this week, down again to my range again. So, I mean, it's done that 3 times since July 23rd. So, anyway, that has nothing to do with anything, but it has been there. It's been in my neighborhood. It has sat at my table. But congratulations, JPM. You have upheld the APE high standards.
Yeah. Okay.
You have a ringer.
So I got to pull up the scoreboard here. Hey, I came on strong at the end of last season. I'm ready to do that again. So Josh has 2. I have Zip, Daniel Zip, and Royce 1. So we're just beginning. It's early, as the coaches in the NFL like to say. It's early. There's no reason to get panic or anything like that. If it's me and Daniel. So Josh, did you come up with what you're going to do?
Yeah, since we were on the subject of small form factor nuclear, let's go OKLO.
OKLO?
Yes.
Okay, we will.
Boop. Okay, J-Lo, what?
Yeah.
OKLO.
J-Lo. All right. Got that.
First of all, let's say producer manufacturing.
Interesting.
I was about to say this one. I thought you'd like this one because there's a little uncertainty to it.
There is. And let me see. Oh, I love it. Okay.
Thinking like 67 to 77 kind of thing.
Yep, I'm checking. I checked out 3 things before I got here. All right. So, yep, that is a good range. 60. Yeah, let's do a 10. So yeah, 67 to 77. So 2,050 cents a piece, folks.
All right. Josh.
And so who's going first?
Josh, of course. He's on first.
He's on first.
Give me like 75-ish. So.
Ooh, that's right in the middle of the range.
I know. I'll take the
5. So you got 77 to 74.50, 74.50 to 72.
No, 74.50 and above.
Okay, 74.50 and above. Okay.
Yeah, that was an awkward number to divide.
Yeah.
Yeah,
no
we
worries.
said 67 to 77. So it's 67 to 69.5, 69.5 to 72, right? And then
No. 70. So 77 is the top. So 77 to 74.5, 74.5 to 72, 72 to 68, 69.5, and then 69.5 down to 67.
Right.
yeah, that's the only difference was the 72 to 74.50 and then 74.50 to 7. See, I did it from the bottom to the top. You did it from the top to the bottom. And I think that is some lyrics in some song. I forgot. 77.
Perma Bear, you heard that, right?
That statement had nothing to do with it. Oh, and I see what you're saying. Okay. All right, Josh, you had what, 72 to 74.5?
No, 74.5 to 77.
Okay,
Yeah.
You got the top then. All right, I got you. All right, well, who are you picking?
Let's make it interesting. Let's go Royce.
I know where he's going though, right where I wanted to
Yeah,
go.
but that way now he can't play.
That was the least interesting pick.
Now he can't play his little game of like, oh, I'll let everybody else go, and this is who I wanted. This is exactly what I wanted.
Okay.
He's challenging your game.
Yep. I'm going to do.
Should have let him go first, Josh.
I'm going to do 72 to 74.5.
Oh, yeah.
That's exactly where I wanted to go. I knew that. That's what. See, now, Josh, if we don't win, and we could have held the top half
That's
of
atrocity, sir.
That's exactly where I wanted to go, though.
Okay. All right, Darin, do your thing.
Well, I have no choice but to take the next lowest, so I'm going to have to go 69. 69.
Oh, well, you're Perma Bear. You sure you don't want the bottom? I mean, look at how.
No, I don't. I wanted the one you got. Okay. All right.
Daniel, this was for you, brother.
He led us astray so that Daniel.
He still did.
Probability is on Daniel's side now. You do realize.
I knew it. I knew he was going to pull some game. I knew it. I saw that. I thought I was one step
That's the thing, though. This isn't like Connect 4. He can't like reserve a spot.
No, but that's the thing. That's exactly how he's playing it. He's playing
4D chess. He's playing 4D chess on a 3D board. That's what he's doing. That's what it is.
Grok is best served live.
That's right. Grok 4 now. Grok 4. All right. Appreciate it, guys. Good stuff. I have a feeling that the Swan may be close. Of course, we keep saying that. But
White Swan
will be next Wednesday. Yeah. a lot of important things happening though over the next week, just like every week. But I mean, it just seems like there's some stuff that has to go one way or another, and we will find out very soon. So thanks, and we will see you guys next week on After the Bell. Bye. Where's that Benadryl?
Yeah.